Oh, hi everyone. This is Trudy from Royal Page Team Realty, and I'm here with Kim Lambert from Capital Home Lending. And we are here to answer all the myths and questions that you have about mortgages, the interest rates, and the market in this area today. Hey, Kim, thank you for joining us.
My pleasure. Thanks for having me.
Thank you. So I'm gonna grill you with a whole bunch of questions that I've been asked in the last little while. You ready?
Ready?
Okay. So the first one from and by the way, anybody that's here, if you've got a question, pop it up in the chat. We'll take care of it for you. But these are some of the ones that have come in recently for us. I've been in my job for under 2 years. Am I able to apply for a mortgage?
That's a great question. It comes up all the time. So either people are in a new job under 2 years or they're in their first job under 2 years. So the long, short answer is it depends on the scenario. So
Okay.
if you're someone recently graduated from university, you've got a job, you're full time, you're permanent, you're on a salary, we can use that income absolutely to qualify you. That's guaranteed income. We can verify it. If you're in a career and you've switched jobs and you're in your new job under 2 years, maybe with a different company, that can be okay too. If you're in the same line of work, no issues at all. If you are off probation, no issues at all. So those are the things we look at. The people that are on hourly, it's a little tougher. Unless they have guaranteed hours, we can't use their income unless we have a 2 year average. So that's kind of case by case scenario. What I would recommend for everyone is to be in touch with a mortgage broker or your bank and say, here's my income, here's what's going on. Be as specific as you can so that the lender can make the right advice for you and give you the right advice. But absolutely, we fund a ton of mortgages for people who've been their job under 2 years. So don't wait, make the first step and get pre-approved and talk to someone because you may be able to buy sooner than you think.
That's amazing because I remember talking to you about a couple of people that you and I have worked with where they have done that job switch or they're independent people that are working, kind of like, the real estate agent over here. Um, so that fluctuation in income absolutely affects that, but the fact that we can still get those mortgages and we can still get those deals makes a big difference.
Yeah,
And I
absolutely.
agree, like the housing market here in Ottawa is fantastic right now. So, um, we've got lots of things going on, so it should be really, really good.
Definitely.
Okay, so here's the other question is, so I get asked often about credit scores. How
Mm,
important are those credit scores? I've got like a 9,000 credit score and I did my credit karma and it's all good. I have no problem applying for a mortgage. And on top of that, I did the bank's 30-second mortgage check. And
mm,
they said I can buy $1 million house and I have a $30,000 a year job.
right. So don't do that. Don't.
Really?
Yeah, no, often, and I'm all for people using little checks and balances just to see if you're on the right track. But like a Credit Karma is not your Equifax credit score. So the majority of lenders use Equifax and if you use TransUnion, but Credit Karma is not that. So don't use it only if you're using it as a gauge to make sure you're going in the right direction. Do not use it as a hard and fast to think you're going to get pre-approved for a mortgage. The ones on the bank websites, again, a little indicator, but they only look at the products that you have with that institution. So it's not
Oh,
your whole picture, it's what's with that institution.
so if
So
I'm with another bank and like
yeah, you
I'm
have things at different
rent
banks.
coming
And
out
you
and
have credit card, like you have a Canadian Tire Visa and you have a Walmart and you have a, I don't know, Costco. That
yep,
might not
the
show
cost
up,
that's important, man.
right? The
Yeah.
Costco one. So it doesn't show up on those quick checks on your credit score with the lenders. So definitely Equifax is the way to go. We can pull it for you when you start the process. The reason it's important for us to be able to pull it at any point, even if you're thinking of buying in a year from now, let's start the process because there's things that lenders look for. The first thing is they need two active trade lines. So that means a Visa, a MasterCard, a car loan, a student loan. any of those types of things, not your Fido or your Bell. These are like real credit, revolving credit items.
So we
Um,
need to know that you're paying stuff.
you need to know that you're paying something and at least two trade lines, hopefully more, and hopefully the longevity is a little bit longer, a couple years at least, so that they can get a good score and a good test of your credit worthiness. So that's important. Often I'll get in front of a client, and the client's like, it's good. I paid off and closed everything. I'm like, no,
Oh,
don't close everything. Super great that you paid things off, but don't close them before you get a mortgage because we need those trade lines. So
okay.
I think that's number one is make sure the right people are pulling your credit bureau. You can also go online or the call number for Equifax and get your own credit score sent to you. They mail it to you. There's a whole lot of questions you have to answer, which is fine for your protection, but they'll send it out to you so you know where you're at. If you're putting less than 20% down on a home, you have to have a score of about 680 or higher. So that's really
Oh,
important to know. And it's not hard to get a score of 680 or higher, but you need those couple of trade lines. They need to be active. So if you have a Visa and you've never used it, you're not going to get a great credit score off that credit card. You need to be actively using and paying, using and paying. So I think those things are important. We can go into a long conversation about credit scores and how they work, but this probably isn't the platform. But make sure you have that conversation with your lender because we have to make sure we're getting you in the right path. For example, I had clients maybe last month, their score was below 680. So
oh,
they were not qualifying for an insured mortgage at the point. However, I gave them a few tricks, tools on what to do. 2
suggestions.
months later, they're over 680. They bought a house. They're moving in next month. So,
That's awesome.
yeah. So if you're talking to the right people, they're going to be able to help navigate these things for you and tell you how to increase your credit score. Super important.
And that's one of the things you and I have often talked about is getting the this done early, like so that if it's like kind of like a real estate action plan, right? Like we talk about this going, okay, so if we want to buy next spring, now's the time because if there is anything on your credit that you need to take care of, you now have the time and opportunity to do that.
100%. Start early as well. More and more often, there's bureaus that get merged together. So if you have a name that's common,
Yeah.
sometimes something shows up on your report that's not yours. So we need to
Oh,
have time to fix that. So
yes.
that's the
I
other
don't want to
reason.
pay for
So
somebody else's debt.
no, and to get it off your bureau if it's bad for sure. But also, like I have people call all the time. They're like, I don't want you pulling my credit score. It's going to ruin my credit score. That's not going to ruin your credit score. What's going to ruin your credit score is if you don't pay your bills, if you're over limit, if you're maximizing all your credit cards, if you're applying all over the place. If someone pulls your credit score once, that's not affecting your credit score. We're here to help you make sure that you achieve your goals. So you
Okay.
have to allow your lender to pull it once. Don't go see 50 brokers and have 50
Oh,
brokers pull it. But if you can have one person pull it, a broker is a good idea because we have all the lenders available to us. You don't have to shop for yourself. We'll do that for you.
because I had a client a couple several years ago now, and they were just kind of every time they went to the bank and they were thinking about, buying something, they had the bank pull like get their stuff. And every time they went, they put several offers because it was like pandemic times, right? They had several offers before I got to them where the bank was pulling their credit every single time. And it was like 3 to 4 times a month that banks and were pulling that, and it just really affected their credit score. Like,
Hmm.
we actually had to wait, I think, 3 to 4 months when everything was going crazy before
Right.
they could actually get in and buy a house.
Right. There's a couple of reasons for that. One, they're considered credit seekers. So that's number one, if you're going all over the place, trying all these different things. The second thing is a lender wants to see what settles. So that means, are you applying and getting credit all these places and it hasn't shown up on your bureau yet? So they're going to wait and say, did you go and open a $50,000 line of credit there, 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 and there? Or were you really just having a conversation? So for lenders, they don't report every day to the credit bureau. It's once a month, sometimes once every 2 months. So a lender who's actually going to lend you a significant amount of money wants to see if you actually secured new debt from any of those people.
Okay. And
Mhm.
if you get even if you don't use that, let's say you get $100,000 line of credit,
Right.
that's still considered debt.
Still
or
considered, it still goes
access?
on, it does go on the bureau. So depending on the lender, some say it's fully utilized, like you've used 100,000, even if you haven't. And some say, oh, it's at a zero balance. We don't have to reflect it right now. But they want to know what's going on. People need to know what your footprint is. So that's why there's a waiting game sometimes.
Okay. So
Yeah,
it's very important to find your people first before you
100%.
kind of go
Your
shop.
people are, and a short list.
Yeah.
People, short list. Yeah.
So your coach is on the sideline. If you're running the plays, your coach is on
Mhm.
the sideline. You need your realtor, your lawyer, or your mortgage broker to start with. Like
Right.
those are your top three.
That's your top three. And then after your insurance broker.
Yeah.
But yeah,
So
but those are your top three, but you don't need several mortgage brokers. That's
you need one.
redundant. You need one. You need
You need
one good
one
one.
realtor, one mortgage broker, one lawyer.
100%.
Yeah.
Exactly.
And if you've got everybody talking together, I think that's a great team.
100%.
I know when I go out with clients and you've already pre-approved them, if we go see a house, we want to get that house pre-approved too. I will often send you this house to say, okay, this is the list price. These guys are really interested in it. And I I kind of know the range of what they're approved in. I don't know all the
Right.
details, but
Right.
because I don't want to show somebody
Right.
something that's above their range.
Right.
But yeah, then we can have that discussion before they fall in love with a
Before
house.
they go.
Yeah,
I do that with every realtor I work with. I have them send me the MLSs before they even go see the homes. And the reason for that is twofold. One is, do they qualify? That's one. But
yeah,
two, is the client aware of what that payment's going to look like? Because you might qualify for something, doesn't mean you want to make a payment of $5,000 a month towards your house. Dependent, right? So
right,
there's the double thing. Some people say, well, I don't want to spend more than 2,500. Okay, then this is the range you're looking in. You might qualify for here, but you're
right,
going to buy here because of your cash flow desires. Yeah,
right.
absolutely.
So last night you and I we were emailing back and forth and we talked about different properties in Ottawa here that
Yeah,
are currently available and we had some numbers.
yeah,
So can we go through a couple of those?
yeah, for sure. So what we did just for fun is we
Yeah.
pulled a detached home. We pulled a more modest row house, townhome, and then we pulled a condo. And
Okay.
the reason we did that is just say, hey, what does that look like in today's environment? We know rates have gone down. They're continuing to go down slowly but surely, but they're going down. What we do know right now is houses, this is more a real estate thing, but houses are staying on the market a little bit longer than
They
they
are
were
staying a little bit longer.
6 months ago.
Yeah.
So it's kind of a buyer's market. Rates are pretty comfortable. Prices are pretty comfortable. People want to move, people want to sell. So you're in a good position. So we use 20% down across the board. We know that some people have 5% down, some people have 10, whatever, but just for a litmus test, 20% down across the board on an average single family home in Ottawa, priced at 280. Sorry, 680 is a purchase price, 20% down. Average payment on that is 3114 a month plus property tax. So very reasonable in this market environment.
For a
Um,
single family
for
detached,
a
yeah.
single family detached. So this is an
Yeah.
actual listing. We pulled one on La Chapelle,
Yeah.
and that's an average listing detached,
Yeah.
so you know that works. We pulled one on Glenhaven, which is a town,
Yep.
20% down. There we're looking at a payment of 2560 a month plus the property taxes. So again,
It's
very
almost
doable.
rent.
All in, you're in at 2,900. Exactly. So if you're renting a townhome, I have a few rentals in New Orleans area, townhomes. 2,900 is kind of what the rent's going, maybe even a little higher right now. So if you're renting and you're comfortable with that cash position and you can qualify, go buy a house. Go buy a
Yeah.
house and then you own something. And in 5 years, you'll have gained equity, not only from paying down the mortgage, but from market appreciation. So absolutely something to look at. Then we pulled one more super cute little condo in the east end of Ottawa, listed at 352. Very
It was cute.
reasonable. Super cute property. It's
Yeah.
on Valet if anyone's looking.
I was gonna say,
Very cute.
I know
And
where Valet is.
yeah, 20% down, payment 1612 a month. There's a
That's
condo
less
fee
than it.
there.
Yeah.
Yeah, it's very low, but a condo fee of there of 455 and then the
Low.
property tax of 220 a month. So all in 2288 a month for a 2 bedroom really nice little condo.
And
So
it's close to transit and everything else.
close to
Like,
transit, close to everything. So, um, if you're looking in those ranges and you have income, you should go talk to a broker. You or a bank if you prefer, but we can do broke banks too. But
I was gonna say, you have a
we can
lot more to kind of get
we
at.
can do them all, but it's
Yeah,
time to start looking, people, because the reality is rents aren't going to get lower in Ottawa. It's money out the window. I mean, I'm a landlord. I appreciate renters, and there's always going to be a place for them for sure. But if you desire to start paying something down, get into something. And I say this all the time. It might not be your forever home. In fact, it probably is not your forever home. It's got to be a home you like and you can live in, and
yeah.
start building that so that you can eventually move into something different if you so choose.
Well,
So
it's
I'm a
about
huge
building.
fan. It's about building. You know
Yeah.
what? Rates are low right now. If we're looking at an insured deal, 5 year 454 right now, the 5 year average on sorry, the 25-year average on a 5 year fixed over the last 25 years is 5.25. So we're almost 0.75 less than that right now. So will they decrease? Yes. Will they
Yes.
dramatically decrease and go into the 2% range? I don't believe so. I
I
don't
don't think
believe
we're
it's
going
in the
back there.
2% range. I think anywhere in the 4% range is fantastic. Go do it, get approved, and if you can get into the market, do it. And we're seeing more and more people buy with friends, buying like two, three, four friends buying together. We're seeing brothers and sisters buy together, brothers and brothers buy together. There's a whole lot of different phenomena on the mortgages we're doing right now. It doesn't just have to be two people. We have four people on files. It depends.
Well,
So
you told me a really cool story not that long ago about four people that worked in one
the
of our
nurses,
hospitals, the
was that it?
nurses,
Yeah.
and they bought a house in a fabulous, beautiful neighborhood, and they all
Yeah.
basically all own shares in this house.
Yeah, it was four nurses who bought together a single family home. They all put in the same amount of down payment. They all work in the same hospital. They're all in a property that they couldn't afford as singular people or even dual people. Their payments are very affordable because it's split four ways. And they're loving it.
Gorgeous place.
So we're just looking outside of the box for people right now, like what works
Yeah.
for people and whatnot. And I think one of the other questions that came in was around duplexes. So,
Yes.
so I love a duplex. They're hard to come by in Ottawa. A duplex, a
Eh,
triplex, beautiful idea, especially if you're owner occupying a unit. Because if you're living in one of the units, it's considered an owner occupied property, and we can use 100% of the rent on the other unit or the other two units. So if you're
Oh,
making a modest income or a good income even, that's going to help your purchasing power. So people are like, there's no way I can afford that. You know what? Well, let's run the numbers, because I've done quite a few for first time home buyers. It's genius. I have one person in, young guy, bought a triplex, living in the smallest unit, renting out the other two units. And I think his total out of his own pocket a month is under $200 a month.
oh my goodness.
Like, it's genius. Genius.
Because you can use 100% of the rents to, because
Of course,
if
income
you bought it and you didn't move in and it was like a total rental investment
rental.
property,
Yeah, then
they only
depending
count
on the lender,
50%.
50%, depending, like some lenders are 50%, some are 60, some are 70, but it's not 100. That's for sure. So it
Oh,
makes a lot of sense if there's a property that's a true duplex. So not a house that you can rent a room in, a true registered
like
two
duplex,
properties, two units, or
triplex.
three units.
Yeah.
Yeah. We can go all the way up to four as owner occupied, four doors
Okay.
owner occupied. After that, you can't. So,
Oh, so we'll
but
stick it under four. So less
pick
than a
under
handful.
four, yeah.
Yeah.
And they come up and they're really, it's a fun idea to do it. So have a look at
Yeah.
those.
I was
Mhm.
gonna say that's a great way to get into the market. House hacking, here we
Absolutely.
come.
Absolutely. Like I just did one with an older person who's
Mhm.
nearing retirement from the government. And she's looking at a triplex. She's going to live in one, rent the other two out. She's going to be mortgage free, and like she won't have to pay anything out of her pocket. She's putting a bit of a down payment. But she just said, you know what? I can ride this into my retirement and it's going to give me cash flow at some point, but I'm not paying anything to live. Smart. Single
Smart.
lady, good for her.
Yep. That's amazing.
Mhm.
Yeah.
Yeah,
I just feel that this, like when I put up the title for this, I said buyer advantage. I just feel like this is the time for buyers to get back in. Are you seeing an increase in people coming and getting pre-approved in this
100%.
to
100%.
interest rate reduction?
Yeah, we're seeing more and more people getting pre-approved. I'm having a really busy September compared to last September. It's wildly, and October right now too is quite busy. So we're seeing a lot of short closings, like under 60 days, seeing some
Yes,
at 30 days. But people are out there and they're buying and they're excited. And I get a lot of calls and emails from people who said, "Hey, haven't talked to you in a while. We're thinking of getting back in the market. What do things look like now for us?" And for
right.
a lot of those people, the rates are a lot lower. Sometimes their income's higher. So the positions totally change, as well as some homes are a pretty good deal right now,
Yeah.
comparatively. So I think that we're going to have a really busy winter. I do believe that next year, when rates kind of flatten, there's going to be a lot more people out there, and that could affect your purchasing power because it could create more interest in many homes.
So
So,
there is like, and I'm seeing this in some houses already where we see a lot of first refusals. Um,
mm,
but we also see where we're in bidding wars where we haven't, like, they're not the 2022 busy
no,
wars like within 36 hours, but we're seeing bidding wars that are coming close to or slightly over asking price.
agreed,
And
agreed.
we're getting that multiple offer. And I just see as because we still, let's face it, we still do have a housing crisis, right? Like we are still short, and the government or the stats today said in Ottawa specifically, we are at only 20%, less than 20, we're at 12% of what we need to do to reach the 80% to get the funding the government said
Mm,
they would support us with
mm,
in new builds, right?
fair.
So,
I
yeah,
agree. I am seeing lots of multiple offers. I'm seeing a lot of urgency. If someone likes a home, like I'll get, working with the realtors and the clients are like, "Hey, text, like there's one we're looking at. We want to make an offer, run the numbers quick for us, like urgent, urgent, urgent." And we run them and we work all sorts of hours because of that, which is great. But you have to be quick. I always say it's like you're at Winners. You better work. If you like it, you better buy it because it's not going to be
buy
there,
it. Yeah.
after. So there is more urgency than even 6 months ago, I would say. I'm seeing a lot more urgency. I'm seeing a lot more people qualifying or seeing like how they can piece things together. Of course, we're having parents co-sign. Of course, we're having parents gift money. But there's also a lot of people out there that are just sitting on and just not sure what to do, you
Mhm.
know? So we're seeing that more and more right now active in the marketplace. So I think it's going to be an interesting next couple of months for sure to see what people end up with.
Okay. So, how does that fit in with the announcement that came from the government on the 1.5 million and 30-year amortization? Because I've seen some things kind of come out on social media that says, "Hey, now everybody can get, 30-year amortization rather like," but I thought it was only for new homes.
Yeah, so it's kind of cryptic. Like there's not any article out there that is extremely specific.
Okay.
But what I can tell you is this, and some of it we have to wait and see because they haven't disclosed everything. So
Of
what
course
we
not.
do know is this: up until December 14th, an insurable mortgage cannot exceed $1 million purchase. So that means if you are purchasing a home over $1 million, it doesn't mean it's not insurable like your house insurance. People get confused over that. It
Yeah.
means it falls in a different bucket when it comes to rates.
Okay.
So even if you put 20, 30, 40% down, all mortgages are insured on the back end through the lenders. So it falls into a different bucket because there's greater risk to whoever's lending you the money. So
Right.
after December 14th, that number increases to 1.5 million, which it should have happened a very long time ago because the market is there, right? We have a lot of homes over $1 million in Ottawa. So that is happening. So what that means for those people is you're going to get better rates on a home up to 1.5 million than you could get today. That's number one. The second thing is, which they haven't totally disclosed, which is interesting, is how much you have to put down on that home. So right
Ah,
now, you put 5% down on the first 500,000 you borrow, 10% on the next 500,000. They have yet to disclose what you're going to have to put down on that amount between 1 million and 1.5. Right now, it's 20%. We don't know if that's changing or not. No one's talked about it. So we're going to have to wait and see. So there was one little snippet that said, oh, you're going to have to put less down. So basically, if you were buying a $1.5 million home today, you would have to put 300,000 down. If you were buying a $1.5 million home December 14th, again, I don't know if this is true or not because it's only in one little snippet. It says you'll have to put 125,000 down. So instead of 20%, they're saying 8.838%. But I don't know if that's true or not because that's not in the black and white from any government document that I've seen, and I've looked everywhere. So we don't know. You might be able to put less down. You still have to qualify.
you still have to qualify for the 1.5.
Yes. But still a good thing for those people in that market. Better rates are coming your way after December 14th. So that's good. The other thing they announced was a little while ago, they announced that if you're a first time home buyer and you're buying a new construction, you can get a 30-year amortization versus a 25-year amortization. That increases your purchasing power about 10% on average.
Okay.
Great. Fantastic. Now what they're doing starting December 14th is first-time home buyers, 30-year new construction or resale. That's in an
Oh,
article today. Yeah, that just came
okay.
out. And not first-time home buyers buying new construction, 30-year as well. What they're not talking about yet is what you have to put down as a down payment. And they're not talking about what those interest rates are going to look like. Because as soon as you pass that 25-year threshold, it's up to the lenders. So yeah, you might be able to get a 30-year, but I don't know if it's going to be the same rate as they offer you at a 25-year. Because right now, today, it's not.
Oh,
So we have some things we still have to
I was
wait.
gonna say, there's some things that need to be worked out here
Yeah,
because
there's some things when you've been lending this long, you look at and like this isn't all the information, right? So
right.
if you listen to any
This is why I
seasoned
talked to
lender out
you.
there talking right now, they're like, listen, it's not all out there yet. We got to wait and see. So that also happened. Those things firmly will happen December 14th. I would say I've been lending 30 years. If you can buy a house today, buy a house today. Don't wait. Don't
Yeah.
wait on these snippets that are coming out. It's not going to do you a ton of favors. If you're buying in the one over the 1 million, I mean, we can run the numbers both ways for you. Maybe you have a closing December 14th. We don't even know right now is if December 14th when you write the offer, or are they going to backdate it to today as long as you're closing after December 14th? Don't know.
So like we have
Don't
no
know.
idea. Basically, this was a news snippet.
New snippet. All the data's not out there yet. So we're going to
So
keep everyone apprised, but right now
the implementation is just a little foggy.
it's a little foggy because they're still going to decide a bunch of things, I'm sure. So what I would say is if you can buy a house now on today's rules, buy a house today on today's rules, because after December 14th, who knows what's going to happen, but also who knows where the market's going to be, you
Or
know?
if we've got an election and all that goes
We
bye-bye.
don't know. We don't know. So so that's that information as of today. There's some great things out there, people. Like you just have to talk to the right people to know what you qualify for. One thing I will stress, I said this the other night, my kids laughed at me, but it was basically I said, you have to be vetting where you're getting your information from.
Yeah.
Example, I'm not going to go to my parents who haven't bought a house in 30 years and ask them how to buy a house. That would be equivalent to me going to them and saying, teach me how to use an iPhone when they use a BlackBerry. It's
Right.
not the same thing.
Not the
What
same.
happened 30 years ago is not happening today. What happened 5 years ago is not happening today. So you have to make sure you're talking to the right people, and those are the professionals. There's a reason that we have to take education courses every year and keep up to
Yes.
date, right? So
Yeah.
that we can have the right conversations. It's not water cooler talk at work. It's not, chat at a hockey game. Well, I think my friend did this. The amount of calls I get that said, well, someone told me this.
I got this rate and it was
Yeah,
really, really good. but then
Mhm.
the terms on that, because,
Are
life
horrible.
changed and they had to move across the country and break their
Yeah,
mortgage,
yeah.
and now they've got 3 years worth of interest to pay or something crazy.
100%. So you
Yeah,
have to know it's a combination of your exact scenario, which is different from the person on the left and right of you. I guarantee no one has exactly the same scenario. So that's number one. It's a version of what's your life situation,
mhm,
right?
yeah,
So if you want to get into a mortgage, and there are mortgages, you can't sell your house, you can't divorce, you can't do anything in the 5 years that you have the term, but you save 0.10, maybe that's not
is
the right
that really
call.
worth it?
Maybe it's not the right call, right?
Yeah,
So
because
making sure you know your rate, making sure you know your product, and that your lender understands your lifestyle. It depends if your wife or your partner is going off on a child leave, say coming up, then you want cash flow is important to you. So we got
yep,
to look at that, right? There's things we got to ask as lenders, and there's things we have to know as lenders so that we can get you in the right product, and understanding that our lives go up and down and our life stages change, but making sure that you're set for that, right? So
mhm,
just today, 6 o'clock today, I met with a couple. They're in the process of selling 2 homes, buying 1 home. So we had to come up with a plan A if they don't sell the homes, and a plan B if they sold 1 or 2 of the homes,
right,
right?
yeah,
My job as a lender is to make sure that they can pay off as much of the new mortgage as they can when 1 or 2 of these homes sell,
right,
right? If I wasn't asking the right questions, I'd be like, oh, take this 3 year, 4 year rate, and then all of a sudden they get a whacked with a penalty in 4 months when everything's sold. Horrible,
yeah.
right? So you have to ask the questions, you know?
Well, you have to have somebody with experience who knows what questions to ask people too, because there's a lot of people out there, whether it's in like a realtor or even a mortgage broker, they're like, "Oh, I'm gonna get my license because it's easy."
Yeah.
They look at this is an easy job. And you and I both know this is not that easy, because we're not only talking about like people's money, but we're talking about their livelihood and their families and their homes that they've raised their children in. So it's different, right? Like
It's different. And it's
so
sensitive, you
it
know?
is sensitive.
It's sensitive, and it's something that you need to make sure you're talking to the right people about, because I've seen many people when I've got them second to somebody else and trying to help them out of a situation, or looking at what someone put someone in and going, you didn't need to do that.
Yeah.
So you have to make sure that you're talking to people. Not all bank employees are created equal. Not all brokers are created equal. Not all brokerage houses are created equal. Some have
Agreed.
31 lenders, some have 6, some have high expectations as to protocols, some don't have much. So you have to know who you're dealing with, who they can lend with. It's about experience and excellence and breadth of knowledge, how quick they can turn a deal around. It does not take a week to get approved on a mortgage. So
Agreed,
if
because
you're
I've
talking to
called you
someone,
before.
yeah, if someone's talking to you and they're like, oh, I'll let you know in a week, you're not dealing with the right person.
Okay. But so we had talked earlier in this conversation about, getting pre-approved
Mhm.
and, having those kind of ducks in a row before we go shopping, right? Like before
Sure.
you go with your realtor out shopping. So what would be the first thing that you would suggest somebody do to go get pre-approved?
Yeah. So the first thing is talk to your realtor or your friends, or see what broker or bank person they dealt with, and go and book an appointment. Now, you don't have to go in person. It's 2024. You don't have to go meet someone and carve time out of your day. It doesn't have to be between 9 and 5. It could be evenings and weekends. I can tell you, with the right conversation, I can get enough information from you in about 15 minutes. That's it. And then I can do a pre-qualification. Pre-qualification means I haven't looked at your documents yet. Pre-approval means I've looked at your documents. So I can have a conversation with you and say, "Oh, you're a government employee. What's your salary?" Pretty much they know. What's your, birth date? What's your address? What's your social insurance number? All that information, married, not married, divorced, single, whatever. All that data, we dump it in an app. 15 minutes later, I'll say, well, your credit score looks good. Yeah, your trade lines look good. Your income's good. Your down payment supports this purchase price. It doesn't take
So
long.
we have a buffer.
We have
We
a
can kind of
buffer.
say, like, we kind of can say, okay, so here's kind of sort of what you can look at,
Hmm.
and then we do the deep dive after that.
After. Yeah,
Yeah.
because every house is different. Every house has a different property tax.
Yep.
Every condo is definitely different. Their
Yeah.
condo fees are low as 137, as high as 1,000 something. So very different. Condos are harder. We absolutely have to run every scenario, every property, because each one's unique.
Yes.
When you're looking at a single family home, we can kind of guess the property tax range. Townhomes, same. So it depends on where you're purchasing and what you're doing, but it makes good sense. And I say this all the time to people. I say, if you're looking at, you're going to see two properties with your realtor, send them
Yep.
both to me. I'm going to tell you what it costs for each of those homes monthly, because you might say, oh, I don't like that one's $20,000 more. And I said, well, what if I told you that's $98 a month? And now you've got the granite counters and you've got the finished basement and whatever. Oh, then it's not so bad, right?
Yeah.
You want to know,
98 bucks a month, I think I can find out.
right? So you want to know what your cash flow looks like before you go to see it, because then you're comparing that.
Okay.
Yeah.
Because, yeah, like, it's so easy to just kind of jump in, especially when you see the commercials on TV and you're like, oh, 90 seconds, I can get pre-approved and stuff like that. And it just,
Yeah, I can tell you this. I was a regional manager at three major banks for 20 some years, and people would go online, fill out a mortgage thing, and it would pop out to people that reported to me. 78% had an error. People either didn't read, didn't slow down to read properly, or they put their annual income as a monthly income, or they put this, or they forgot that. Um, they're not, there's a reason that people are in these jobs, and it's not so you can take 30 seconds and type in some numbers and think that you're good. And you're also, people make errors and they say, well, this is the interest rate. Well, maybe that's not your interest rate. And are you adding the 2% that we have to use for a qualifier? Like, there's a bunch of things that you're not factoring in necessarily. And then you're out looking at this range, and then you get the jolt to say, you can't afford that. You need to look here. And all of a sudden you're like, I don't like anything.
yeah,
I don't like anything in that range.
I
So
want to buy the $1 million house
yeah,
now,
yeah.
but I
You
can't
want
afford it.
the T-bone at McDonald's. Doesn't work.
Yeah.
Like, it doesn't work. So we have to get you pre-qualified. It's worth your time. And what I say to clients all the time is, like, we'll talk for 15 minutes. And then if you want to meet in person, absolutely, because then we can have a great conversation. But our first conversation is futile. Come and drive across town and meet me, or I drive across town and meet you, and you don't have the information we need. We're leaving there with no answers.
Yeah.
Everyone's wasted their time. So
Hmm.
let's have the conversation, especially when we get into business for self, different kinds of income. Like, let's get it clear on what you need and what we can use and what we can't use.
So, and just prior to that, you mentioned kind of that qualifying rate.
Hmm.
Go back to that for me.
Yeah, so a
What does that
qualifying
mean?
rate. So years ago, the government introduced this in saying, we want to protect clients. We don't want to put them in a home that they can afford today, but then rates increase and they
Which
can't
they
keep
did.
up with their payments, which they dramatically did, let's be honest. So that what we do is you take a rate and we add 2% to
Okay.
qualify. So that means if your rate today on a 5-year fixed insured is 454, we're qualifying you at 654, right? So
Okay.
when people go online, they don't think about that. They do the 4 5. There's a huge difference in 2%. I can tell you that.
Yeah,
So
there is.
so we are qualifying people 2 points higher than the actual interest rate. And that's very important to know. And that's where it comes down to things like, at the end of the day, people are like, well, I want a variable. Super great that you want a variable. We got to qualify you on a variable. So the one I just did right now, the variable is at 5.7 versus 454. So your purchasing power just changed dramatically.
Right.
That's okay, but just know what you're doing, right? And have the right conversation with your lender to know that you can choose that variable, but it's going to change the price point that you can buy it.
Right. So it would be like, okay, so I want variable because I believe interest rates are going to go down,
Right.
but what that allows me to buy might be the townhouse at 575
Exactly.
rather than the single family home at 650,
Exactly.
right?
Exactly.
So do I take that 1% difference because we've got 454, 575 and lock into a 5 year
Right.
and then
and then you're stuck. Like what I say to people a lot is, so we'll use that example. So 5.7 versus 454. So that's like 1.3% difference in a rate, right?
yeah,
So what people are hedging on that take a variable today, and it's okay to take a variable, but what you're hedging on is that rates are going to drop at least 5 times
in the next,
in the next whatever, three,
yeah,
4, 5 years, 5 times at 0.25 a shot to break even with what you would have got on today's 5 year rate. So you're not only hedging that you're thinking they're gonna drop 5 times, you're hoping they drop way more than 5 times. So you make up for the extra money you paid until they drop those times, right?
right,
So we
because
have calculators for that. And it's a fun, interesting and fun to run those numbers because I'm all for whatever people want to do, but I need to educate you on what you're doing. And when I do that calculator, not one person has picked variable. And it doesn't mean variable is not a great for the right reason for the right person, but you
right,
need to know what you're doing, right? You need to know what you're doing.
yeah.
So,
No, and that's one of the things you and I have in common is that it's about making sure that education piece is out there because I can sell a house to anybody doesn't mean that it's a good fit for them. You
right,
you can write a mortgage or a deal for anybody, but that doesn't mean it's the right one for them,
right.
right? And I think both you and I are passionate about making sure that we get the right fit for people
100%.
because
100%.
to me that makes all the difference in the world because I want you to be happy not only when you get the keys, but 30, 60, 365 days down the road
Yeah.
where you still want that house and you're still happy with it. And, you know, the next time that that mortgage comes up, then, you know, we've
Mhm.
got something that we can work with, right?
100%. Yeah, know what you're signing, people. Like, know what you're getting into. Know what cashback means to you. It's great
Yeah.
that people are excited to get $2,000 cash back and then sell your house and then you got to pay the cash back. I know
Yeah.
that your rate's a little higher because you're getting cash back. Like, there's all these nuances that people need to know.
So
So,
it's going through those contracts line by line, basically,
line
and
by line.
asking a lot of questions
Yeah,
because
absolutely.
the rate, like, let's say you, I mean, I don't know, somebody comes up with 3.25% rate,
Hmm.
but then the terms are like, well, you're stuck in this rate for the next 7 years
Yeah.
or
And you
whatever.
can't sell your home and you can't divorce and you can't move. Oh, sorry, you're with the military. You got transferred. Like,
Too bad,
oops.
so sad. Yeah.
Right? So you have to know what you're signing. And you know what? It does sometimes you run the numbers, you're like 0.10 is this amount a month. Are you aware? Like I think people have it in their heads that it's this huge thing. Well, I'm saying 0.10. It's, depending on the scenario, it could be very small.
Yeah.
So
It could be
so
50 bucks a month. I mean, you ran numbers for a client of mine not so long ago on a property out in Kempville,
mm,
and they were making a jump, right? Like they were kind of nervous and they just like, but when they kind of sort of looked at it, it was something like I think $40 a month difference,
yeah,
if
it
that,
was very small. Yeah, it was
between what
under
they
50. I
had.
don't know if it was 40, but it was under 50 a month.
Yeah.
And it made total sense to do what they did. So, but in their head, when you don't know, you don't know.
Well, they
So
went from
let's
a
get the
townhouse condo to a single family home.
yeah, and it
And
was
yeah,
huge. It was a huge, amazing move for them, and their cash flow is almost identical, and they've got a bigger, better house.
yes, they've got a huge, and yeah, I was like, how do we not do this
Yeah,
for them?
you have to do this. Yeah.
Yeah.
So
Yeah.
that one, yeah, that was a good one, and it makes sense. So those are the things we need to look at with people is say, what does make sense for you?
Hmm. Yeah.
Yeah.
And everybody's different.
Everybody's different. Every file's different. Every single one.
Every, I was gonna say,
Every
there is
single
not a
one.
deal that I've done in my entire career that has been the same.
No, every single one's different. And, that's why we have 31 lenders in our brokerage house because we don't know. What might be right for you may not be right for your brother, may not be right for your uncle, may not be right for whoever, your best friend. It's different scenarios. So,
So it's
yeah,
also the reason that it's so important not to get, you can get opinions from your family, your friends, and
right.
the guy at the bar. But it's not the best place to get concrete information
It's
because
not.
everybody is so, and those people sitting next to you, your family, your friends, the guy at hockey, they don't know what goes on behind closed doors,
Right.
right? So they don't know what your situation is like. So we need to, extend a little grace and maybe just have that conversation and go find somebody who can educate
Who
you on
knows? And we're
what
not here to
exactly.
judge. We've seen everything. Believe me, the people that come in, they're like, I'm so embarrassed. I'm like, this is nothing. Like, everybody has something, so don't worry about it. But what I can say is, so example, government worker, $90,000 a year. They're like, well, my buddy got approved for this, so I'm going to qualify the same way. Well, you know what? Your buddy doesn't have two trucks with $2,000 a month in car payments and student loans, and he had more money down than you have available. Not the same.
No, not the
Not
same.
the same. So
No,
it's not just your income, it's everything else. So it's not the same.
it's not the same.
Not the same. So you have to talk to people. It doesn't cost you to talk to anybody. It costs you time. It costs you time. That's it.
Well, and if you've got somebody who's knowledgeable and educated and qualified, then it's not going to cost you a.
Time. That's for sure. Oh, I think Trudy got stuck. There we
Oh,
go.
there we go. You got stuck, I got stuck. That's okay.
Okay.
It's not
Perfect.
gonna cost you, like, it may cost you
15
15
minutes.
minutes to, like, I know when, clients come to me and they're like, "Oh, I need to get pre-approved." I'm like, "We've seen a house." I'm like, "Okay, so here's a couple, go interview them." Like, because not
Yeah.
everybody is the right fit. I'm not the right realtor for everybody. Every mortgage broker, every mortgage person is going to be different. Go talk to them, have a conversation, find out how you fit because your team needs to be also your team that you're comfortable with.
A
But
hundred
don't go
percent.
with, just make sure you're getting the nuts and bolts, not the balloons and streamers,
Exactly.
right? Like we'll
Exactly.
do the balloons and streamers when you get the keys to the house and we've done everything.
Yeah.
Nuts and
Yeah.
bolts, that's what we need right up front.
Yeah. And you need a person that's okay to say, no, that's not your budget, or no, that's not going to work. Because
Yes.
it's no doing you no favors if you get to the end and you can't close on your house. So sometimes you might not like the information, but it's the right information,
Well,
right?
that's it. If you got somebody who's willing to be honest with you, that's a big deal.
Hmm.
If you want somebody who's gonna lie to you, then you're facing a lot of disappointment.
Right. Agreed.
Yeah.
Agreed.
So,
Yeah.
is, is there anything else that we need to be covering tonight, Kim?
I think the only other thing I would say is while you're saving your down payment, don't move money between a whole bunch of different accounts to make an extra 30 cents of interest. All lenders are going to ask for a very clear, linear line at least 90 days back to show that the money is yours and that you've come into it honestly. So don't be moving stuff all over the place, or you're going to be providing all of those accounts as well. Don't go closing an account that you had money in because you're like, oh, I had my money in my TFSA and now I've moved it to my bank account, so I closed my TFSA. Guess what? Try and get a statement for that TFSA now. Not very fun.
Oh, no, no, that's not gonna be fun.
Not good. It disappears off your banking app. It's not a fun experience. So again, a reason to start early with someone. We'll get you lined up properly. Everything will be fine. And be honest, honest, honest with your lender, because they're going to find out anyway. And if you're lying about something and you can't produce a document, that's on you. That's
Yeah,
on you, because we need to provide the things. It's not us, it's not our money, it's a lender's money. So we have to provide the full package to a lender to say, yes, lend to these people. Here's why.
yeah,
So you're going to have to produce it. So just be honest. And if you're not sure, ask your lender what you're going to need. And sometimes you'll go to your employer and say, I need an employment letter and a pay stub. And I'm going to ask you maybe again in 3 or 4 months because they stale date after 30 days. But at least we know what we're starting with.
well,
So,
and that's one of the things, because you've done some stuff for me, me and my family as well.
hmm,
And one of the things you said to me early and upfront was, tell me everything, I'll forget what I don't need to know.
yeah, Tell me
Just
everything.
just tell me everything.
If that's not important, I'm not gonna write down and I'm not gonna
Like,
remember.
I'm gonna forget it. Like,
I'm
if
gonna pick and choose. I know what I'm looking for, and I'm gonna write down and get that stuff for you,
yeah,
right?
and that's been a lifesaver for like as an independent contractor for me, when we were renovating this house and doing all of that. That was a massive lifesaver because my husband had just retired. I was an independent contractor, still getting the 2 years, all of that kind of stuff. But telling you everything and being able to do that made it so much easier for you to be able to go to these lenders and say, okay, this is why you need to lend to these people. This
Yeah,
is why this happens, right?
yeah,
So yeah, so find somebody you trust and go from there.
absolutely.
Yeah.
That's what I would say. And start now. You know what? Maybe you're buying in a few years. That's okay. Start now.
Start planning
Because
now.
then you can get a plan. And I've had many young people come to me and I'm like, okay, this looks good. This is what we're going to do. Then they have a goal. And it's amazing how much more they put aside and save because now they have an actual finish line versus just conceptually going, I don't know, someday I'm going to buy a house. Well, this is what you need to do.
Yeah. If you know
Right?
the step. So it's kind of like when you do like a real estate action plan, you kind of say, okay, so a real estate action plan is going to tell me these are my goals. Like we're going to go through, we're going to develop your goals, and then we're going to hook you up with the people that you need to know to help you achieve those goals. And then we're going to put
Exactly.
a plan together and we're going to move that way. So
Hmm.
that if it is a year down the road or 5 years down the road, you're right. It makes a huge difference to say, okay, well, I kind of sort of had an idea, or I impulsively decided I fell in love with this house, but I have no down payment and I haven't done anything to put myself in that
100%.
situation.
People need to know it doesn't cost anything to have a discussion with a realtor. It doesn't
Yes.
cost anything to have a discussion with a broker. And it
Exactly.
often doesn't cost anything to use a broker unless we get into different deals like private lending and things like that. But a regular deal does not cost you a penny. And often we're going to get you a better product and a better rate than you can get anywhere else. So know that and understand that. Know that a realtor's there to answer any questions for you. You don't have to do it alone. I mean, I don't remember what realtor I was talking to today, but they said someone was buying one of their listings, representing themselves, doing everything. I literally stopped and I said, why would anyone do that? It
Yep.
costs
I'm
you
in the same
nothing.
situation. I was like, I don't understand.
Nothing. It costs
Yep.
you nothing to have a professional represent and negotiate and make sure you've done everything right. Why would you
Have
try to do
somebody.
that on your own?
Yeah.
Crazy.
Like, and I appreciate that some people want to do it on their own, but at the same time, I'm like, it's hundreds of thousands of dollars that you're talking about.
It's huge. It's the
Why?
biggest investment likely that you're going to make, and you're trying to do this ad hoc is bananas to me. It's just like going on to every second website and saying, "Well, I saw this on Facebook, this rate on Facebook, this going on." Well, you know what? Dig a little deeper and let me tell you why that's not a good product, right? So, you got to trust the people you're dealing with that they're doing the right thing by you, and people wouldn't be in real estate with longevity or lending for 30 plus years if they weren't good at what they were doing.
Yeah, like we.
Someone would out you by now. Like it's not for the grace of God that I'm still being a broker. It's because we know what we're talking about. And in our team, we have different languages. Everyone's got a ton of experience. We have access to the best lenders. You're going to be placed with the right person. If you want to deal with a male, a female, different dialects, give us a call. We'll find you the right person that you're comfortable with. Some work more at night, some work more in the day, some work weekends. What works for you? Oh, are you a doctor running the ER and you have to talk to someone at 11 at night? I'm probably your girl. It's not it's not someone on our team who has young kids. It's someone with older kids that are out late, so I'm up anyway. So I'll gladly talk to you at
I
11,
was gonna say,
right? But
yeah,
we'll find the right match. We'll get you the right realtor. If you don't already have the right realtor, we'll find you and put you in contact with great realtors. Some like rural, some like more in town. There's all different things that we have to factor in for you. We have great networks across everywhere, but yeah, got to get started, get pre-approved, talk to a realtor. Have those conversations today or tomorrow. And sometimes you start the process and it goes a lot faster than you think. Next thing you
yeah.
know, you're buying a house.
Well, that's what happened with my clients that went from the townhouse condo to the single family. We just met for churros at Lone Star
Right.
and over lunch, and the next thing we knew, we were putting an offer in on a house.
Exactly.
And she's like,
Exactly.
"Ooh." Wasn't even thinking about buying at this point in time, but we found the right place, the right person, the right broker, right
Yeah.
time.
Yeah. 100%.
So it does make a difference. And then, if you're somebody that's, it's going to be a couple of years, it's okay that it's a couple of years. It's okay that it's a year. You may then want to buy something that's new construction,
Right.
right? So
Right.
that's going to take you a year and a half,
Right.
potentially, maybe even two,
Exactly.
depending, right? So
Exactly.
then you've got time to build up that network.
Yeah.
Okay.
That's
Anything else
it.
that we should talk
No,
about?
this
I was
was a
gonna say
lot of
you
fun though.
I was gonna say you and I could talk forever, by the way. So
True. It's true. It was a lot of fun. I hope we added some value. If there's something we talked about and you don't understand, reach out. If there's something we didn't talk about and you don't understand, reach out.
yep.
We're here to help, you know?
Cover it next time.
Absolutely.
Yep. All right. Well, thank you. I don't see any questions in the little chat. Um, but we will talk later.
Perfect.
Okay.
Excellent. Have a great night.
Bye.
See you soon.
Thank you.
Hold on a second.